Okay, here we go. 3, 2, 1, and we are live. Hey friends, Ernie here, Trader Futures, and here to talk to you today about signals and how signals, trading signals that is, can make you a better trader. So what do I mean by signals, and how do they make you a better trader? Well, first of all, there are lots of places that you can get signals. I mean, they're everywhere. Everyone is willing to give up or share with you their brilliance. Trade my free signals. They're free. And that's about what they're worth, free. Signals are generally thought of as automated picks. Some signals are created manually. So there are people out there that do their analysis, whatever it happens to be, fundamental or technical. And then they send it out there with instructions on how to trade. They'll give you the entry, the exit or target, and maybe a stop loss, all based on their... And they'll also understand what their strategy is. And these signals can be generated, like I said, either manually or automated. If they're automated, then they're generated from some computer program that they've programmed. Hopefully they've back-tested it. Of course, back-testing is no real proof that signals will work. And in fact, usually when they say they're back-tested, I perk up with extreme skepticism because most people don't have any idea how to backtest a computer algorithm or a strategy. and that's because they'll curve fit that algorithm to make it look like it worked very well over the past, and produce this spectacular equity curve and say, look, it worked for all of these signals in the past. The reason why it worked for all those signals in the past is because they configured it until it did work. So they made the perfect algorithm to work with all the conditions that happened in the past without any assurance that it will work on things in the present or in the future. And invariably, these types of signal generators may work for a week or two, and then they'll fail. They will fail. Always fail. You might get lucky and have one work for a month, then it will fail. So, why trade signals? Well, first of all, you have to take a look at the people who are successful at trading. The people who are successful at trading are those typically professional traders that are with an institution, an investment bank, a prop trading firm, a hedge fund, etc. And they are, in fact, trading from signals. Now, there are a very special few who are doing their own analysis and then trading from that, whether it's systematic or discretionary or whatever. But virtually every successful trader, and you can check this out. Go read Market Wizards, any of the series of the Market Wizards books by Jack D. Schwager. And he interviews all of the best traders in the world that you've never heard of. And the reason why you've never heard of it is because they don't want to share anything that they have with you. They've spent millions and millions of dollars developing their algorithms and their signals that they typically generate that prompt them to... most of them are doing either some combination of automated trading or generating signals and then discretionary trading off the signals. And they have... So that's what they do. They are essentially trading off of signals. All the best traders in the world are trading at least some of their trades, or the majority of their trades, or all of their trades, using signals that they've developed either through years of experience or with teams of mathematicians and other experienced traders that have gone through the rigor of time. And people recognize that, and they are willing to pay them unbelievable amounts of cash to trade their money, or they trade their own money. But it's the signals. Now, I shouldn't say it's the signals that are making them great traders. It's what gives them the edge. They have developed something that takes away all that part of trading. If they're discretionary traders, it takes away all that analysis work that they have to do, all that judgment, and simply tells them where the opportunities are, and then all they have to concentrate on is execution. Execution, how big their account is, how much they can leverage their account, what will keep them on the right side of the trade, and that's it. They don't have to think about what the market's doing. They just concentrate on those signals. The signals give them their cues, and they play off that because all the hard work has been done by their computer or by people in the background that are doing all of this and giving them and putting them in the right position. See, when you can eliminate half of the things that are going to make you question or give you a lack of confidence, when you can eliminate that and develop confidence in those signals and then just concentrate on your execution, then the confidence bubbles to the top. Fear subsides. You're not exhibiting the FOMO that will then cause you to make bad decisions. Don't worry, Iceman. I won't yell at you today. Just don't, just don't be a dick. And then you won't get yelled at. Maybe. So, this is what you have to do if you want to be a better trader. It all comes down to this: having confidence in what you're doing. You develop that confidence in knowing what you have, knowing your edge, knowing what you can actually risk, how to preserve capital, how to take advantage of opportunities. And you do it with confidence. That's what signals do for you. They give you confidence. Of course, you have to have a belief that the signals will work. Now, will signals work all the time? No. I mean, even in our signal service, we have times when they work spectacularly, 85% win rate. And then you might go through a short period of time or some period of time where that 85% win rate might come down to 25%. Now, that doesn't necessarily mean that you still don't have opportunity to make money, even if it drops down to a 25% win rate. Because what really matters is how many, for those things that are winners, what are the winning opportunities? Right? How far can you take it? How far beyond the target does it go? If you feel that, maybe your signal generator is not working to peak performance, or if the market is... Now, here's one of the things you got to watch out for. When markets have extremely low volatility, it doesn't matter what kind of signal generator or automated system or strategy that you have, it is very difficult to trade short term and to get any kind of movement out of stocks, to find opportunities. And so that's where execution comes in. You have to kind of evaluate, okay, I have an opportunity in front of me, but the market is friggin' dead. We're not moving. All right. Does that mean that you don't trade? Not necessarily. But what it could mean is that you put less at risk. trade smaller. And that's generally what you want to do anyways. I mean, trading signals, you want to trade small. Trading in any manner, whether it's that, discretionary, automated, or whatever, you should trade small at first, seize the opportunity. If it goes against you, you're not going to get killed. The opportunity may still be there, and then you can add to the trade, bring your cost basis down, and shoot for making profit from there. Manage your profit from there. Oh, wow. Tyler Jenks died? You mean no more Hyperwave? Well, that's sad. You seem like a nice guy. What are my thoughts on gold and silver pulling back? Well, it looks like everything's pulling back today. Gold, silver, the markets, treasuries, oil, everything. Even Bitcoin's pulling back a little bit. So, I don't have too many thoughts. And it's interesting because if you go and look at the economic indicators, the economic reports that have come out this morning, they're just showing glowing reports. And I think that overall the market is thinking, man, we're just a bit overbought. Now we got all these glowing reports. They're thinking that maybe the Treasury is going to hedge on their idea of cutting rates. And so they're taking a little off the table. Volatility is down, so they're doing exactly what I'm saying. This is how a professional trader mitigates their risk. They start pulling back, not putting as much skin in the game so that their exposure is smaller. They're getting signals that are telling them that. Now, of course, we have PatternCast, and that's what it does, is it generates signals. And I think I've laid out a case of why these signals are superior. They're actually very close to what you're going to see in an institution. They are not based on any one strategy. They're based on literally hundreds or thousands or even hundreds of thousands of strategies. It's a pattern recognition machine that is finding opportunities and generating signals. And the proof is in its overall performance. I think the last couple of weeks, it's that performance has come down a little bit. Really the first time, I think, in our history, it's actually in the very beginning, it's come down to about where it was before, where the average move on the average trade was around 125 to 150% of the target. You might think, well, that sounds pretty good. But that also means that there are some trades that aren't meeting that as well. And so now it's at a what I would consider an average range. And when people are used to it being hyped up, in other words, it's performing, off the charts, when you go down to average, it feels like it sucks, even though it's still good. And so what a good trader will do is they will play their signals. They will play those signals based on the relative risk that's in the market, the relative opportunity. So even though it may be still putting out good opportunities or entries, the opportunity may be less or less certain. So you draw back a little bit. Reduce your position size. Now this is really hard to do if you're trading futures. For the most part, if you're trading E-minis, these full-size futures contracts, it is really difficult to do. But there is an answer to that. It's not so hard to do with stocks. I mean, you can trade as little as one share of stock if you want to, and you can minimize your risk. Same way with Forex. You can trade micro positions, or you can trade mini positions. Micro positions are very small. Well, with futures, they also have that opportunity. You can trade micro futures now. And so there's no reason when you have low volatility, you're getting a signal and it looks like an opportunity, Why would you go in with an E-mini contract that's worth $100,000 when you can go into an E-mini contract that's only worth, say, $10,000 and only is eating up, $500 of your account instead of $5,000 of your account? That's what you do. So signals are taking away that whole idea of, well, how I even got there, and just giving you the opportunity to think about the market in terms of its relative risk, its relative volatility, where the opportunities are. Play sensibly. Develop good habits there. It allows you to develop good habits. And that's the great thing about signals. Dollar is up a bit. Trojan Hell says, Ernie, the other day you showed Boeing stock to buy at 340, and that signal is still usable. The signals that come off of PatternCast are only good for that day. Now, I know that Boeing went up pretty quick, and now today on earnings it's dropped down sharply. And maybe right now is a good time to buy Boeing, but I don't have a signal for Boeing right now. So any signal that was generated by PatternCast is only good for the day that it was generated. If it triggers, then we give it up to 4 days to realize its potential. So when a signal is generated, you don't just jump all over it and say, that's not confidence. That's stupidity. Confidence is knowing that in the long run, most of these signals are going to hit 150 to 200% of their target. Most of them, on average, say 60% or more. And over time, a good portion of them are going to remain positive above the entry. But they might pull back. The opportunity is still there because the system generated that signal. So if you don't go in it full on right at the entry, and it does pull back, if you went in small, you have the opportunity to add to that signal and buy it on the way down. In other words, buy into the weakness. And that's what trading micro contracts can do for you. It can really leverage the power of those signals and the opportunity they present, and measure, that opportunity by buying into weakness, selling into strength. And you're not committed. You don't commit your whole wad, and it kind of ham-hocks you, puts you in a straitjacket when you're trading too big. You don't have that ability to. It's either all or nothing. You're in, out. Either you win or lose. What is the minimum starting bankroll for the Bitcoin calls? That's a good question. So Bitcoin is the Bitcoin and crypto calls are coming soon. I'm going to give it about 2 weeks, maybe a week and a half, 2 weeks. The cool thing about crypto is that you can trade with just about any amount that you want. Of course, what you're limited by is the commission or the spread that you're dealing with. So you could trade with just a few $100s with crypto. And then, of course, that depends on your broker. What is the accuracy of your signal, would I say? I don't know what the future accuracy of any signal is. All I can tell you is what it's done in the past. And if you want to see the performance in the past, go to our site, PatternCast.com, and look at the results. In general, you will see, I showed this yesterday, you will see the following performance. Now, this is up until the end of June. In a few days, when we get all the July data, I'll put the July data in there. But the average move has been about 182% of any triggered call, on average. It doesn't mean all of them go 182% of the target. Some of them go much less than the target. There's only been a few losers over the past several months. About 70% All right. So anyways, let's see. What is this doing here? All right. So the number of trades right now that hit 70% of the target is about 70% of the trades. So that's kind of a ballywick. almost 62% of the trades hit the target or exceed it. So when you have that kind of performance, that gives you, that's here. I'm sorry you can't see it, but it's right there. All over here are all the trades. Since we've opened doors, there have been 225 trades since October. We get about 4 or 5, up to 10 trades a week, sometimes more. And that's kind of the performance right there. Right there. After 4 days, 96% of them remain above the entry. So that's pretty cool. So if you have a system like that and it has that kind of performance, you can start trading with some confidence that you don't have to worry about the strategy behind it. All you have to worry about is the execution. But that doesn't mean that you should have the confidence to just put the whole wad in there, because that's dumb. These are just trading opportunities. One of the problems with most people that are putting out signals is that they give you this sort of risk-reward thing. That's completely made up. How do they know what the risk is? How do they know that that's a definitive entry point? What is it based on? 20 bars? 20 bars of data, and they're going to decide whether or not there's actual risk there? They have no idea. With PatternCast, it evaluates 20 years of data and finds patterns that you can't see. It's real statistical analysis. But signals are just a much easier way to trade. So hopefully, Trojan Hell, that answers your question on the accuracy. Michael's asking, what is your take on sentiment analysis? You think it can work for markets like crypto? For example, like scraping the web for comments, posts, or on social media? I've seen systems that work off of sentiment. So they scrape the web, or they analyze a Twitter feeds, the Twitter stream. A lot of institutions actually have supercomputers that are constantly analyzing the market data in social media as well as news. The problem is that most of that stuff is not necessarily predictive. It's reactive to what the market is. So you're always trading behind. And that's one of the problems with trading sentiment. You're always trading after the fact. Now, there might be some momentum plays that you can play there, and that might work with momentum trading. But generally, I would say that momentum trading is not forward-looking. It is backward-looking. And it's very difficult to eke out an edge in the market when you're trading against everybody else that is already reacting to something that happened. And that's the great thing about PatternCast, is that it looks at scenarios developing and compares them to things that happened in the past. And then it gives you a what-if scenario. If this happens after this scenario develops, then there's a likelihood that something will happen in the future. And so PatternCast is forward-looking. So that's really the difference. And that's exactly what signals can do for you. They provide opportunity. They are timely, they are forward-looking, they allow you to develop the confidence because you don't have to worry about all the analysis. And then all you have to concentrate on is your execution and your tolerance and capacity for risk. And then manage that trade, manage the profits instead of managing the risk. And that's a much more comfortable way to trade. Takes all the fear out of trading. I'm not saying that there isn't fear. I mean, you always have worry, but if you're always trading within your means, if a trade goes against you, it shouldn't make you lose sleep at night. Are the Bitcoin signals for use on futures exchanges only, or can we use crypto leverage exchanges? They're going to be for crypto exchanges. They're definitely going to be for crypto exchanges. So if you're interested in those crypto signals, go down below, click the PatternCast link, and that'll bring you to a page, and you'll see right in the middle there where you can express your interest in the crypto signals that will be coming out very soon. As a matter of fact, I'm going to be talking with our data provider in just a little bit, and we should have this all up and running. The signals that we'll generate will be applicable to, say, Bitcoin futures as well. Crypto Bacon says, most people say that in the long run, the best strategy is buy and hold. Even the most successful traders barely beat the market average return. Are you saying your system is better? I agree that buy and hold on average is better, but there's still very few people that are successful. And it still comes down to their ability to, and most of those buy and hold people are basing their decisions on signals. What we found is, and to answer your question, is that yes, our signals are better than most other analysis because we have a very small window of opportunity that we look at and compare that to other patterns that happened in the past that is statistically significant. And the numbers speak for themselves. So we don't automate these signals. We could. What we do is we provide opportunity. And that opportunity is great because it puts you in a good position with an excellent statistical edge, and then it's up to you how you're going to trade that. See, that's one thing that we can't control. We can't control how people trade it. I mean, we can provide some guidance, and we do that. We recommend trading very small. Take these opportunities for what they are. Try to buy into weakness and sell into strength. So, overall, I would say that our system is about the best system that I've ever seen in the automated world, in the signal generating world. It is on par with signal generators that I've seen in organizations that spend billions of dollars or hundreds of millions of dollars on developing their signals. So that's what I can say about this. And you don't have to spend hundreds of millions of dollars. You spend a very modest amount of money, very, very modest. Something on the order of less than the cost of a sandwich each day. Much less than the cost of a sandwich. More like the cost of, I don't know, a Starbucks coffee, whatever that is. All right. That's all I've got to say today about signals. Signals definitely will help you become a better trader. And of course, it will depend on, good signals. I mean, you want to make sure that they have real results. And the one thing that I can say about our signals is that we only provide data on actual signals. These are not hypothetical. These were the actual signals that worked. Now, we can't guarantee what's going to happen in the future, but as long as we keep on putting out signals and we keep on maintaining this kind of average up here, then that speaks for itself. And that's what you develop your confidence in. If it starts diminishing, well, I mean, I suppose that could happen. But we've been running these for years, and the system keeps on getting better and better and better. It has its fluctuations here and there, but it's getting better and better over time. Awesome, Mr. Happy. I agree, Michael. Short all rallies on Bitcoin. We're currently just below 10,000. We're on that first dead cat bounce, and I think we're going to be going to the second dead cat bounce. We'll keep updating that analysis as we go along. All right, that's all I have to say. I hope everybody has a great rest of the day. It's beautiful weather out here in Massachusetts. I think I'm going to go play some pool. Take care. Thank you very much. Make sure you hit that like button. Give this video a thumbs up and share it in your social media. I really appreciate that. Take care.